Welcome back, students who are taking Math for Business and Finance and Math Applications. We're working on the theory section of Chapter 16, How to Read and Analyze and Interpret Financial Reports. This is the 5th video, and let's jump down to, let's see here. Okay, the next item is the comparative analysis, vertical versus horizontal. Okay. The keywords here are comparative and vertical versus horizontal. Okay. Comparative means you are comparing basically one year against another year. Okay. Or one set of information versus another set of information, right? Or I'm going to call it data or numbers. Okay. Not data. And the information can be presented in a fashion that it represents amounts, being dollar amounts, or in percentages. Now, if you recall way back when, all right, in the earlier chapters, I had gone through, and this is not anything new to anybody here, okay? Because in the earlier chapter, when we're talking about percentages, okay, we had said that, and I had been using the example of an income statement. If I have revenue, right, less, expenses, that would give me a profit or loss. Or I could have said revenues less cost of goods sold, and that would have given me a gross profit, all right? But these were amounts, okay? And we went and said that they could also be expressed in percents, meaning that our revenues were 100%. And if we wanted to know what our cost of goods sold or our expense was, well, that would be a certain percentage of that expense. Let's say our cost of goods sold was 25%, right? Well, let's use numbers. 100,000 and 25,000 means that our cost of goods sold was 25%, which means our gross profit would have been 75% or $75,000. Okay, and that's the same with the revenue. 100,000 in revenue, 25,000 in expenses, and that would have given us a profit or loss of 75,000. So there was this relationship between amounts and percentages. And to see that again visually, there's our pie, right? And that represents 100% of the whole. And if I took this amount out here, that's going to be a certain percentage. Now, we saw that that could have been, like in the previous chapters, was a down payment, okay? And this would have been the total sale price of the house, right? And then this amount here would have been the amount we borrowed, the loan amount. And that could have been expressed as a percentage. We could have done the same exact thing here with dollars. This could have been 120,000. This down payment could have been 20,000, and our loan amount was $100,000. Okay, and they could have all been expressed in percentages. Well, that's the exact same thing that we're doing here when we're talking about a comparative analysis. Okay, and it's just a matter of whether we're looking at the information vertically or horizontally, and what information we're actually looking for. And as I had said, this here in the first video, that this is going to be, we're going to look at this from the perspective of a balance sheet and not the income statement. Okay. We're not going to do the income statement because it's the exact same thing. It's just a different statement, that's all, okay? Doesn't matter what if I gave you 3 different balance sheets, balance sheet 1, 2, and 3, and then I threw in an income statement, right? Because this information is different from this, and it's different from this, it doesn't really matter what the format is. It's the same principle and same concepts. So with that said, let's take a look at what a vertical analysis looks like on the balance sheet here. Okay, so when you're, again, this here is, a statement, a report, so our heading has to be correct. It has to say it's a comparative balance sheet, or it should say it's a comparative income statement, and it has to have the correct dates. And so here we're looking at a comparison between 2013 and 2014, right? Since this is a balance sheet, we have our assets, which equals our liability and stockholders' equity. And remember from the last video, I had said, you could see that information. The accounting equation, assets is equal to liabilities plus equity, right? We could have seen it in two formats. And when we were looking at the format, let me bounce up there to the balance sheet. I had said that this here is the horizontal format where our assets go across to our liabilities and stockholders' equity. But here on the comparative balance sheet, we're looking at it in more of a vertical fashion. Okay, we have our liabilities and owner's equity, our stockholders' equity, listed underneath each other. By the way, I keep saying owner's equity, stockholders' equity. They are different. Owner's equity, without getting into too much detail, is like when someone first, they're a sole proprietorship. But when you're incorporated and you're selling stock, or that becomes stockholders' equity. But oftentimes in a small business, the small business will incorporate, and the only stockholder will be the owner. So that's why I keep on saying owner's equity. It has to do with the bookkeeping course and just the amount of the usage. So equity, owner's equity, stockholders' equity, for the moment we're going to take it as the same terminology. But anyway, so the balance sheet can be shown horizontally like that, or it can be shown vertically like it's being seen here, okay? And since this is a comparative balance sheet, what we're doing is we're comparing 2013 with 2014. So we have our, notice I have my amounts in this column and my amounts in this column. These are from 2013 and these are from 2014, okay? And if you notice, now we have a percentage column also, okay? Again, this is for 2014, this one is for 2015, and these are percentages. Now, let me erase some of this to keep it cleaner, a little bit cleaner and easier to see. Okay, it's without getting into a lot of the detail here, because what you're going to have for your accounts and what shows up on your balance sheet is all a function of your particular business. Remember, all businesses are going to have assets, liabilities, and owner's equity, but what kind they have, depends upon the business. So the balance sheets, even though they follow the same format, they might not look the same. For example, what if I had a business that didn't have a building and land? Well, they wouldn't be on my balance sheet, okay? Expenses, when I'm looking at an income statement, well, I might not have the same exact expenses as somebody else, okay? Maybe I don't have utility expense, or maybe I have electric and water, but I don't have gas. It all depends upon your business as to what accounts you're going to use and what the format of your statements are going to be like, but they follow the same principles, okay? So here we have the amounts and the percentages, and what we're looking at here is we're saying, okay, our assets have to equal our liabilities plus owner's equity, right? 100% has to equal 100%. Our amount, 85,000, has to equal the 85,000. And I'm just looking at the 2014, but obviously you can see the same thing for 2013. Now, where do we get these percentages from? Okay, well, these percentages are based upon, in this case here, our total assets. And you have to kind of like backtrack when you're looking at this, or when you're creating them. If I'm starting out and I'm saying my total assets are 85,000, okay, I want to know how much my cash is. Well, if I take my 22,000 for my cash and I divide it by the 85,000, okay, that's going to give me 25 0.88%. Okay, and if you notice, there's asterisks here due to rounding, so there is some rounding issues. Okay, but all I've basically done is said, okay, my cash is what percent of my assets. So if we're looking at that great big pie chart, we're saying that this is 85,000 is my total assets, and that's 100%. Okay, then now what I have is I have a lot more slivers in this pie. Okay, this might be my cash amount. Okay, this will be my accounts receivable. This will be my merchandise inventory. Okay, this will be my prepaid rent. Then I would have building here, and I would have land here. Okay, and of course the total, when I convert these all into percentages, right? And how do I convert the percentages? Well, that particular amount over my total amount. So, for cash, it's 22,000 over 85,000. When I divide, I get a percentages, 25.88%. When I add up all of these percents, they all come out to, 100%. Okay. So that's what I'm doing here. That's what they do here is that, they divide 8,000 by 85,000 in order to get 9.41%. Same thing with merchandise inventory. And of course, these all add up to 50.59%. And I could double check that by taking the 43,000 and dividing it by the 85,000. Okay. And that gives me a double check. I should end up with 50.59%. Okay. So that's how, the percentages are created. And the reason why it's comparative is because now we can actually go and we can look at 2013 versus 2014 to be able to see what the difference is. Okay. Well, for our cash, notice we have more cash on hand, right? I'm sorry. Yeah, we have more cash on hand in 2014 because our percentage is greater. Not only that, our amount is greater, 18,000 versus 22,000. But if I want to know what the difference is, okay, I can find out the difference in amount of 4,000, or I could find the difference in amount of a percentage, which in this case is 3.66%. Okay, and that's what is meant by comparison. It's looking at one versus another. Okay, but we have to have some kind of a basis from which to operate from in doing that comparison. Okay. So I hope that was understandable. All right, now let's go down and look at this from a horizontal perspective. Actually, let's stop and I will bring up the horizontal one in the next video.